So if you're looking for investors, you're probably curious to know what's the difference between a credited investor as well as a qualified investor. So a credit investor, these are individuals or businesses allowed to buy and sell securities that are not registered with financial authorities. So obviously a security, if you're saying, hey, a, a certain percentage of my business in exchange for funds, that's what you're doing. You're selling a security. Um, and the different financial authorities would be an example of like the New York Stock Exchange, the NASDAQ, Chicago, I think, has one as well. Um, so to qualify as a credit investor in the US, you must meet one of the following criteria, and there's two of them. So one is income, and the other one is net worth. Now, for income, an annual income exceeding 200,000, or it would be 300,000 if you have a spouse or a domestic partner, and it has to be for the last 2 years, with the exception of earning the same or higher income in the current year. Okay. All right. The other one is net worth. So the net worth, your net worth is greater than 1 million, excluding your a primary residence, then you would also qualify as accredited investor. And so that's individuals, but there also entities can be accredited investors. So for example, a trust with a total assets of excess of $5 million. Now, this trust cannot just be formed specifically to purchase your subject securities. It's got to be a trust that's been, set up to invest in various things, but whose purchase is directed by a sophisticated person. Also, entities in which the equity owners are accredited investors, is all the owners. So you can't just form a LLC, people invest, and then they're considered the entity is considered accredited investor. Yeah. So the implications. So credit investors, they can participate in investment opportunities like hedge funds, private placement, as well as these equity crowdfunding. And these investments obviously come with higher potential returns, but also higher risk and less regulatory oversight that I mentioned before. All right, so let's get into the qualified investor or a qualified purchaser. Now, the definition of a qualified purchaser or purchasers have a higher threshold than the credit investor, and then they can invest in more exclusive and sophisticated investment opportunities. So what are the criteria or requirements? So for individuals, for the qualified purchaser, they must own 5 million or more in investments, either alone or with a spouse. All right, so that's number one. And then number two, yeah, for that's number one. And then for entities, similar to before, but it could be any family-owned business, but that business must have at least 5 million in investments to be classified as a qualified purchaser or qualified investor. And the any trust not formed for the specific purchase of qualifying for the securities. So again, that trust can't just be set up, but but as long as the trustee and each person who's contributed funds to that trust are qualified purchasers. Okay, so then that would be trusts that could do that. Now, any entity owning or investing on a discretionary basis of at least 25 million in investments is also classified as an entity that's qualified investor. And entities in which beneficial owners are qualified purchasers, meaning like if a LLC or whatever that was formed or Inc. is formed, as long as all the beneficial owners are qualified purchasers, then that entity can be a qualified uh, purchaser or qualified investor. All right. So the implications, so you have that qualified purchasers can access investment opportunities and even less regulated and more exclusive than those available to accredited investors, right? And these opportunities include like private investment funds, which a lot of times will have higher minimum investment requirements than other potential or substantial returns. Now, so just in summary, right? So both accredited as well as qualified investors, they'll have access to these exclusive investment opportunities. Now, qualified investors meet stricter criteria, and they can invest in just a broad range of sophisticated financial products. You know, like you may have heard of back in the day, like um, these crazy swaps and stuff like that. That definitely would be more for a qualified purchaser or qualified investor than accredited investor. All right. Well, hey, in the bottom description, we have the 5 ways to finance a business. So I talked about, investing money, which is one, right? But there's 5 other ways that if you're looking to raise or attract money for your business. All right. Thanks for watching. Catch you on the next video.